to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to a special Thanksgiving Black Friday episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Hey, Sip. Glad to be here. Didn't think I'd make it after Thanksgiving. Whoa.
I know that's what we were just talking about. As I age, I'm feeling the effects of eating too much. So that's a lesson that I'm learning recently.
Yeah.
But the markets were closed yesterday. Everybody hopefully was at home, chilling with the family, eating good food, having a good time. The markets are open today, but they're open for what, like another hour, 2 hours or so, and then everybody's back to hanging out at home.
Just another 2 more hours. Yeah. Just under.
And before yesterday's close, the FOMC minutes came out, and
Yeah.
they seemed to be optimistic. And so we've been seeing some buying action, and the market's feeling good going to the holiday weekend. What are you seeing on your end?
Same. I'm seeing the same thing. I'm seeing that the meeting minutes have been kind of reinforcing what traders are thinking, which is that the market is, or that the next hike will not be as extreme, and that the Fed might go into kind of a wait and see move, which, it takes, historically, it's taken 6 months to a year to see any effects by the FOMC's actions. So maybe it is time for them to take a moment and wait and see.
Yeah, and I think the economy, the public would take that as good news. One of the big headlines that stuck out for me was that we're back at like 3-month highs, right? So even with all the rate increases at that hefty rate, things are okay. And we've seen that in some of the other economic news that we've covered on our different episodes. So maybe we should take a quick look at the S&P to see, what are we going to be seeing next? Can we break to the upside? Do we have the legs to do that to heading into the end of the year?
I mean, technically everything is set up. So if we take a look at the S&P 500, which I've got up on my screen here, I'm going to put some lagging indicators. I'm going to put something called the 3 and 5 DMA crossing on board here. And I use this to tell me whether or not a short to medium duration, maybe just short duration reversal. So we've already had a bottom reversal over here on November 3rd. And so we thought, as you can see here, we were coming down. Let me go ahead and turn on my magic marker here. One second, Sip. There we go. But I'll wait. You could see that this down, and we thought that perhaps we had our top reversal on November 11th, but it did a flyby, and it said, no, we've still got legs to this current move up. Even if we hadn't had legs to the current move up, using kind of this tried and true retracement theory that I like to subscribe to for how far things are going and what direction things are going, you can see that we've far surpassed the targets that we needed to have in order to say we're in an uptrend. And we've got 3 moves in this uptrend direction, which solidifies the idea that we are in a confirmed uptrend. So the next question really is where, where next? And so I think we're going to go higher until we run out of legs, and that could be as soon as next week. But I think a lot of people are paying attention to the next Fed meeting, and so I almost feel like ahead of the next Fed meeting, which is not until the middle of December. So ahead of the next Fed meeting, I think that if I draw some of my, again, tried and true retracement lines, at least to the high from yesterday's close, I wouldn't doubt that we might see a pullback somewhere to around 3,840 to about $3,900. So that 60-point range. We might see kind of a little bit of a pullback as people are waiting for that mid-December Fed report. And if that mid-December Fed report goes as expected, I wouldn't be surprised if the next move, and let's see if I can kind of guesstimate this here, if the next move doesn't go higher than 4,000, let's say 4,060, that it heads higher than 4,060, probably higher than 4,100. So I agree with you. We've got some legs, and the only thing that could kick this out from underneath of us is if that Fed meeting early December, mid-December, gives us a surprise. But I do think between now and that Fed meeting, especially with the employment report coming out next Friday, I think we may see just a little bit of dip, probably, like I said, to that 3,840 to 3,900 mark.
And so would a surprise be characterized by 50 basis points? Like it's coming down, but it's still a rate increase.
It's still going to be a rate increase. I think a surprise would be if they stay at 75 basis points. But if they come down to 50, I think that we're in for an uptrend. If they come down to 25, man, or if they decide to just take a break altogether, I think we're going to be in for a huge rally for the new year.
Now, that's quite the swing from 75 basis points to nothing. Has that ever happened throughout history? Like, have we had swings that big from meeting to meeting?
Yeah, I remember 20 years ago after Alan Greenspan. Now, this was before the Fed started using their other tool, which was the bond and buying and selling. So all they really had was the overnight funds rate. And Alan Greenspan, when the dot-com bust started to slow everything down, he totally was like raising interest rates. And then he had to pull back very quickly because he caused everything to come to a stop, like overnight. Like we said, it takes a few months for these things to take hold. And so if you just keep going as the Fed chairman and the Fed Open Market Committee, if you keep going and don't let the results catch up with you, then all of a sudden they catch up with you quite aggressively. And then you have to pull back to keep the economy from going into the recession. So if we learned anything, I think it might be that we got to let some of these results sink in.
Yeah, and we've been getting the economic news, and it hasn't been bad, right? Like this week, we've had durable goods. That wasn't too surprising. New home sales. So things are slowing down, but they're slowing down at a pace that is not, the end of the world in a lot of scenarios.
In all reality, durable goods came in better than expected. So new orders for durable goods came in at 1%. This is for October. So this was even before the holiday buying came in. And if you factor out cars, because people are still buying cars, you'll see here that it was expected to increase by 0.1%. It went up 0.5%. And if you take a look at new home sales, which also was released this past week, what you're noticing is new home sales were for more than inspected. Now, the previous number was revised, but still, this number is much greater than what was expected by more than this number was less than what it was revised. All to say that people are buying stuff that's keeping prices higher because if there's a demand, and the only thing that we're noticing is savings is at an all-time low and credit card usage is at an all-time high. So people are still buying and they're using their savings and they're spending on credit. And this is going to come back to haunt us. So I'm not sure how good things are going to keep going, maybe through the holiday season and into next year, but we'll see probably in January. At some point, we're going to get a reckoning.
Yeah, and we'll probably have to start with that employment number because a lot of those tech companies are cutting, and so that's definitely going to have a ripple effect.
Well, then that's another thing, I keep mentioning that the Fed has this other tool that they're using, the bond selling. And just so people know, the Fed, they release every week what their balance sheet is so you can know how much they've bought or sold. And they didn't release it last night like they usually do because of the holidays. So that report has been delayed till tonight around 4:30 p.m. New York City time, 1:30 p.m. Los Angeles time. Is when that report will come out. But they are selling. What we've seen so far is that it's not so much that they're affecting investing, but they're creating a sector rotation. That's kind of a nerd trader term for other sectors that used to be unpopular are now very popular, and sectors that were once popular aren't popular anymore. The whole tech sector or anything that's perceived to be a little bit like cutting edge or risky is no longer in vogue. And that's a lot of because of this bond selling. It seems like investor dollars are now going towards more tried and true companies or into the bonds market. Anything that had risk, even perceived risk associated with it, it's losing money by droves right now.
And if you go back to some of our episodes, this is one of the charts that we look at almost every week, and it's just been going down and down and down. And I don't think it gets the media attention like some of these other stories that are coming up with the bankruptcies and the cryptos and stuff. And this is the legit stuff that is moving money in the market. So
Creating a huge rotation, as well as it's a way that the Fed is basically shredding cash. So it's making cash more expensive, but in a different way than literally raising the overnight Fed funds rate. That also makes cash expensive. But if you think about it, if they're removing cash from the system and shredding it, which is basically what they do when they're selling bonds, there's less of it to go around.
All right, awesome. So, if you're watching or listening for the very first time, we appreciate you tuning in. AJ has been doing options education, teaching people how to invest for, I think, almost 20 years, right? I think it's like 19, something like that, almost 20 years. And if you want to get involved, if you want to learn some of these strategies and some of these tools and things and approaches that AJ has, we've got a free webinar that I'm going to go ahead and throw the link into the chat. Specifically, as you can see in the headline, 4 shortcuts for growing your investing account into 7-figure income. And what we're going to do later on in the show, we're going to go over some examples. AJ is always looking at tickers. There's always positions. There's always opportunities. Once a week, he gets together with his, I don't know, is it like 400 plus mastermind guru traders, and they discuss opportunities. And on the show, we're going to go over a couple. And if you stick around, we'll go over some specific names and we'll chat a little bit more. AJ, you got anything on your end with the webinar?
I mean, the webinar is all about, if people want to know specifically, it's all about selling options, right? And people are saying that options are risky, but that's usually people who are buying options. They're using a stock replacement strategy and basically leveraging their money. But selling options is where creating income is all about. And that's what we talk about on that webinar. So if you want to get into kind of the nitty gritty around selling options, that webinar can be used as kind of a template for what to do.
All right. The link is going to be in the chat. Go ahead and check that out. We're going to take a break and we'll be right back to talk about lab grown meats. Am I reading that right? Yeah.
Yeah. They're coming. I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, lab grown meats. I had to search the that you had here. It's a company previously was known as Memphis Meats, called Upside Foods. They have just received, or they've received the first green light for FDA approved cultivated meat which is basically lab grown meat. What are your thoughts on that?
Well, I mean, the first meat that they chose was chicken. If anybody knows anything about me, they know that I became a vegetarian in 1991. And then around 2008, thanks to a doctor, Dr. Ben. I actually met Dr. Ben at one of my live seminars in Orlando, and then I realized he was in the same town of mine in Colorado. And Dr. Ben, I was getting into the CrossFit world, and so I was doing all this exercise, trying to do it on a vegetarian diet. And Dr. Ben explained to me through showing me how much vegetable products I would have to consume every day to maintain my CrossFit, and it was like tables full. So he got me to start eating fish. So I guess now I'm called a pescatarian. But uh, chickens in general, birds freak me the heck out, right? I don't know why. Maybe it's because they're related to dinosaurs or something. But if I was to eat any sort of meat, it would probably be like cow or pig or something, because birds have always freaked me out. So the idea of growing chicken meat in a lab so that it doesn't have to be the bird itself, I'm all for it, man. In fact, I've been waiting for this. I mean, I'm all about the meat substitutes like the Impossible Burger and the Beyond Meat Burger. I love those things, but man, this is going to be actual meat, except it's grown in like what we grow beer in. It's grown in a stainless steel vessel, very similar to how beer is brewed, but it comes out as chicken meat. So yeah, I think it's got a future. I'm waiting for this company in order for them to go public. They're still a private company. They're still receiving their venture capital money. I mean, over $2 billion has gone towards this in the last 2 years. So, I mean, private investors are funding the heck out of this. I think this might be the future.
I mean, world hunger is a major issue, maybe not so much here in the United States, but across the world. And so this is a solution that helps mankind. And so I think I'd love to learn more about the health, ramifications of bioengineering your food. I mean, I don't know, but there's got to be some drawbacks, maybe not. But if we're going to be feeding 8 billion people, we can't raise the livestock to make that happen.
Well, and they say that one of the biggest contributors to the whole storms and global warming and climate change is the agricultural industry, like growing meat, and especially with folks in China getting more affluent and being able to afford meat. They say that that's like one of the biggest contributors. Like cows farting is a big deal, and so yeah, I mean, I'm all for this. And what I've also, it's kind of a sneak peek, is these are the same companies that are going forward with growing organs, replacement organs, meaning you could go and give a cell sample and then grow yourself an organ. In fact, they're already doing that with bladders. Bladders are pretty simple. So if you have bladder cancer, they can actually in a 6 months to year time grow you a new bladder that you won't have to take the drugs for, to keep it from being, you don't have to get it from a cadaver and take the drugs in order to keep it from what's the word where you reject it, rejection drugs, I guess. This is your own cells, but more complicated are things like livers and kidneys, because they have different shapes and different things, different cells doing different things. And so these companies like Memphis Meats actually are the ones who are looking for some sort of short-term product in order to, get a cash flow coming in so that they can fund the bigger long-term research into growing us our own kidneys and our own livers so that we can have replacement body parts for when we get old.
Very interesting. We'll keep an
I'm
eye
gonna
on
start
it.
drinking a whole bunch of like booze because I know I can have a new liver in a few years. So I'm just gonna
Right.
become like an alcoholic.
Well, at the World Cup, they're serving this Budweiser One or something, right? It's non-alcoholic beer because they
Uh,
banned all beers the day before the World Cup.
I wonder how that's going down. Oh,
We'll look into it. All
yeah.
right, cool. So, moving on to our next topic, AJ's pick of the week.
Mm-hmm.
In earlier in the episode, we had touched a little bit about the housing industry, which is staying resilient, but so is the auto industry, I feel like. And
Yeah.
the last few episodes we talked about the iconic company Ford, but this week your pick of the week is one of their lifelong rivals, GM. So,
Yeah.
what are you seeing in General Motors that you're liking, either to the upside, to the downside? Because when you trade options, it really doesn't matter whether a stock goes up or down, but there's an
Uh,
opportunity.
especially if you trade it the way we do. So we like to sell the premium, create the income. And so, what I look for when I'm trading premium, when I'm selling premium, is I do look for something that's sideways channeling. And I want to be sure it's sideways channeling because different option strategies are optimized to make the most profit off of different patterns. And so I like to match the perfect option strategy with the stock chart pattern and whatever other patterns I see and identify in order to make the most profit. So a sideways channeling pattern is just like perfect for applying income generating strategies with option selling. So what I look for is 2 tests minimum of support, 2 tests minimum of resistance. And as you can see, GM is giving me my exact pattern like on a silver platter. And so we're right here at the top around $41 for resistance, $32 for support. And so I'm simply waiting for GM to give me the signal. I thought it gave me the signal a couple days ago. And if I jumped in on it on November 16th, that's fine. But I'm waiting for it to give me another signal. And perhaps I'll do some dollar cost averaging. And what I'm doing here, Sip, is I'm either shorting GM stock or I'm buying some back month deep in the money, far out in time put options because these initial transactions are what I need in order to satisfy my broker so that in the future I can sell puts. And I want to sell puts to create income. And I would sell puts at lows. So I would set up this whole trade now, like in the next couple of days when I get my final signal. And then every time GM drops to around $32, I'll sell my puts, create that income stream, and I'll be off to the races. So I just wanted to highlight this to folks because it does look like GM is in the market to be telling us it's time to get that initial covering position in place so that we can start creating income off of it. And it's a really nice quality stock. It's not like a 2-bit penny stock. It's a quality stock that's going to be around for a while. The investors are cool because GM gives a nice dividend and they're always reporting positive earnings. So because of all of that, GM's a great stock to turn into an income generator.
Awesome. General Motors. We're definitely going to keep an eye on that. And so if you're watching, listening, and you're hearing puts and you're hearing calls and you're asking yourself, what is this? How do I even begin learning? Well, you can go watch the videos. There's a lot of education on YouTube. There's a lot of people out there. You can Google search it. There's information. But if you want to work with somebody, if you want to ask the questions, get the hand holding. AJ's got a wonderful program that has been, I think we launched this maybe like two months ago, has been getting a lot of traction, a lot of new members coming in. And every week on the show, we want to just give people the opportunity to join AJ and learn one-on-one how to use options as a way of income, how to leverage your portfolio. I know a lot of people have retirement accounts and they're asking themselves, well, what do I got to do to start utilizing this? That's exactly what you're going to learn when you work with AJ and his team of coaches in one-on-one training. So I'm going to go ahead and take this link. I'm going to throw it in the chat. And if anybody's interested in learning more, how much it costs, what are the steps, when do you got to show up, what do you got to, what quizzes and things you got to take, go ahead and sign up. There's a no obligation consultation. You could speak with somebody this week, next week. I'm not sure. I'm hoping we're giving people the weekend off. And we're gonna go ahead and throw the link in the chat. AJ, what's the greatest value of somebody signing up for this, especially today on Black Friday?
Yeah, our focus is hand holding. Our focus is making sure you're successful before we let you go. And our focus is learn while you earn. So it's not like we're teaching you stuff and then just sending you away. We're actually looking over your shoulder. And as we teach you, we're also going to be doing some trading, doing some watch list building, doing some hot list building. And it's all about hand holding. If you really, especially the people that we're getting are people that tend to have tried some stuff on their own, or they tried some stuff that turned out not to work out for them. And so they really just want to learn and do and be successful. People are just completely tired. And I understand it. They're completely tired of having things told to them will happen and then they don't happen. So they really just, they're coming to us because they want to learn how to do this right. And we prove to them that, by the time you're done with us, you'll have already made, in fact, it's a guarantee, SIP. We guarantee that you'll have made back the money that you invest in our education while you're in the program before we let you go. So it's really, the coaching turns out to be free.
Yeah, and we have a question. There is a Black Friday sale running, right? We can go ahead and send that out if someone's asking.
I mean, the Black Friday sale we're running is a sale that is for people who are part of our program already. So if you're part of our program already, you've probably received a couple of emails that are telling you that some of our upgrades are at crazy reduced prices. I don't think we've reduced it to this price ever. And it's at a short term. It's for Black Friday. And yeah, if you're part of our program, take advantage of those while you have a chance.
All right. Well, maybe we'll send something out special just for tuning into the show. So thank you, Lau, for asking, and we appreciate the input. We do have a question on that GM trade. You want to cover it real quick?
Sure. What's the question?
Okay. Let's pull this up. All right, here it is. If GM was at the bottom of the channel versus the top, what would be an example option strategy? Would it be done with a deep in the money call? That's a great question. Thank you, Tony.
That's absolutely correct. So if you back up to, say, the beginning of October when we were at the bottom, excuse me, if that was the pattern that we're seeing now, a bottom reversal, everything is just done with calls instead of puts. So the initial covering position at that point would have been to either buy the stock or buy deep in the money, far out in time, back month call options. That is the covering position. And then instead of up here going ahead and doing the initial covering position, we would be selling calls and buying protective puts. So it doesn't matter when you have a sideways channeler. It really doesn't matter whether you start at the bottom or you start at the top. You've got a transaction. The difference is you just substitute calls for puts. All you have to really remember in order to do any sort of strategy is buy low, sell high, and that calls move in the same direction as the underlying symbol and puts move opposite. So for instance, when you're at the bottom, that's buying low. What should you be doing here? You should be buying calls and you should be selling puts, right? Because puts are at a high price because they move opposite. So whenever you're at a bottom, think if you're not buying calls and selling puts at bottoms, you're doing something wrong. And at tops, you should be selling calls and you should be buying puts. And so long as you just double check and say, what am I doing at this reversal? If you see that you're doing anything other than selling calls and buying puts at tops and buying calls and selling puts at bottoms, if you're doing any of the opposite transactions, you're kind of a salmon going upstream. You're not going to make any money that way.
And if you want more specific outlines or details into how to do
Yep.
that, go ahead
In
and
the
check out
video.
go ahead and check out that webinar. The link is in the chat. All right, moving on to the most exciting part of the show.
Dun, dun.
So throughout the week, as AJ is engaging with members, students, having conversations with other traders, people ask and provide a lot of suggestions on different names. And so in the speed round, we're going to go ahead and throw out some of these questions, and AJ is going to give you his input on what he would do, whether he likes it, whether there's an opportunity or not. All right, moving on to our first speed round ticker. This is Tin from Oak Brook, Illinois, and he's interested in Verizon, the cell phone provider. Verizon.
Cell phone. They also do some in different neighborhoods. They do some fiber optic. I know around where I live in Washington D.C., they've got their FiOS product. I know because I subscribe.
Ticker symbol VZ.
Yeah. All right. So I'm going back in time, just kind of getting a history of Verizon. I used to have a good friend who traded a lot of Verizon, but it's always been a little bit hard to figure out the pattern. The investors for Verizon seem to come and go depending on headlines. And as you know, when you're selling income, which is my favorite strategy, headlines are, not what we want to have, because we don't want people changing our patterns. We want something consistent. Still, it looks like Verizon seems to have bottomed at $35. And I don't have my 2 tests of support and 2 tests of resistance. So I'm not sure that I'm going to subscribe to jumping into creating an income trade here. I think one of the things that you might ask yourself is, do you feel like Verizon's a good company to have in your portfolio for the long term? Because if you do, this is one of my favorite strategies. In order to buy a stock with certainty that you'll get the exact price you're looking for, what we can do is sell cash covered puts. What does that mean? It means you sell a put, make sure you have the money to buy the stock. The strike price that you choose for the put will be the price that you pay for the stock if somebody wants to give it to you at that price. So if I sell cash covered puts at $35, I have to make sure I have $35 per share. But so long as I sell that put, well, I'm guaranteed that if anybody wants to take me up on that deal, that I'll only pay exactly $35 for those stock shares. Even if Verizon is currently trading at $39 or $40, if somebody decides that they're willing to sell it to me for $35, fine. Otherwise, and this is why this is such an awesome strategy, if I take a look right now at the $40 puts, which is what we've been talking about, $40 puts are going for about $1.19. Am I looking at that right? Let me make sure I'm looking at that right. I'm sorry, $35 puts is what I've been talking about. So $35 puts, I mean, they're only going for about 7 cents, but still, if I do 100 of those, right, because options are sold in lots of 100, that's $7. I mean, $7 is $7, and the scoop is somebody might be willing to pay me willing to sell me the shares of stock for $35. If they don't, I just keep that $7 and keep going. If I'm willing to pay a little bit more, like say $37.50 or something, if I'm willing to pay a little bit more, then I'm going to get 24.5 cents for every share that I sell. So that not only gives me a discount on buying the stock, even lower than the 37.5. If I'm forced to buy it, if you apply that discount, it's more like $37.25 instead of $37.50. But I'm also, right, if nobody decides that $37.50 they're willing to sell me it for that low of a price, I get to keep that money, and I get to do it every month until somebody's willing to sell it to me at the price I want to pay. Selling options creates so much certainty. It's the opposite of what people perceive with options. People think options are risk. if you do it this way, options are all about certainty. They're all about removing risk.
And I think at the end of the day, you should consider all of these factors, and some your approaches you like to see a little bit more support and resistance over
Yeah.
time, right? But if someone else has a more, another reason that has maybe something to do with fundamentals or product development, there's different ways to approach and different tools to kind of harness um, your guesstimate, right?
Absolutely.
And make money from it. So thank you, Tim. That was Verizon. Moving on to our next ticker. This is Tommy from Astoria, Queens, New York City in the house. This is KE Holdings, ticker symbol BEKE. This is a new one for me.
Me too. This is a China company, and I don't know much about it except for that they're a real estate type company, and I'm not even sure what type of real estate they're investing in, whether it's here in the States, here in China, or somewhere else globally. But just looking at the technicals, let's zoom out a little bit. I am seeing a pretty stable level of support dipping down here to about 11, maybe $12, and resistance up here at $18. We're right now right in the middle. So what I would do right now is I'd kind of hold off and wait to get to a top or a bottom. So it looks like it's stalled right here. It actually gave me a symbol a couple of days ago that it might be finding a bottom, but I don't think that it's given me the follow through to that signal to actually say that I'm sorry, I said a bottom, a top. I think that investors are stalled waiting for earnings. But I would expect it to go higher at this point, and I would wait. This looks like it could be a good income generating company just looking at the pattern. I'd want to do a little bit more research. Let's do one other thing, and that is let's see how healthy the options market is. So I see that options are trading every $2.50 up to $25 and then changing over to every $5. That's the traditional strike price increments for options. And so if I come back over here and I kind of draw those increments in, say 20, 22.50, going back down 17.50, $15, 12.50, $10. I want to look over and I want to see, can I, with those increments, basically bracket the pattern that's formed. And I think with the 17.50 and the $10, I would be able to easily, maybe even 12.50 and $20. I think I'd be easily able to bracket this sideways pattern. And the other thing I like to check out, and this might be helpful for a lot of you, is making sure that there is trading. So I'll look at the bid-ask spread. This is the near-term option. Let's look at like the April option. This is one we would use for protection. Yeah, I mean, there's about 15 to 20 cents of bid-ask spread, which tells me that, yeah, there's people trading this. So I don't know much about this company. Let me go
I
back
just
to
did
the
some
chart.
research. I got some.
Tell me what you found out.
They seem to be like the Redfin, like in China, where
Oh,
it's an online platform that helps with the buying and selling of homes. So and they don't seem to have, one thing that I'm noticing is similar to how Neo had or like some of these Chinese companies have very choppy fundamentals because they don't have to adhere. I'm not getting a lot of that there. So I would say that there is a little bit of risk in that from that perspective.
hmm. Yeah, I mean, just know about the underlying company that, it's not like a General Motors where we know everything about them. But the pattern says that it's possible. So I would just make sure, you might calculate what your max risk might be, and then you might even divide that in half so that you don't expose yourself much. But this might be a fun one to trade.
Yeah, so thank you for that, Tommy. We did have one come in on the chat that I thought was interesting and relevant. Earlier this week, Disney fired their current CEO and brought back
Yeah.
former CEO Bob Iger. And so, yeah, someone wants to know about your thoughts on Disney.
It's expensive. So it makes it difficult for us if you've got a smaller portfolio in order to, turn this into an income trade because that initial covering position could get somewhat costly. But if you've got the portfolio to do it, it does look like Disney has found a double test of its bottom. So that's really cool because what we could do, and Disney's traded a lot, and so are their options. So I would not buy the stock itself. Let's see, I don't even think they give they don't give a dividend. So you don't need to own the stock. What I would do is I would go out to say July or September of 2023 and I would buy some call options. And I would go deep in the money, as deep as I could. Let's see, the July option doesn't seem to have as much liquidity. Let's look at September. Okay, September has some liquidity. Maybe go, I'm just doing some math in my head over here. Maybe looking at this either $65 or $70 strike price. You see, instead of spending $99 per share, I'd spend about a third of the price in order to get a controlling stake in Disney. So that's using a little bit of leverage. It looks like the $70 call is trading at something like $35 roughly. So you spend that, and now you're set up. That call option is going to appreciate, and if Disney decides to go up, then you're good to go, right? That thing is going to appreciate dollar for dollar with the underlying stock. If Disney goes forward and tests this overall level of resistance, then that's when we would sell our premium, buy our protection, create a income trade out of it. So I think this is a good one. If you're unfamiliar with these strategies, then I always recommend you try it with paper first, do a simulator trade and see how this one works out. Because I feel like one of the things with the churn in Disney is that investors are going to be in a wait and see mode. And so sideways channeling is probably where Disney will be for the next, season or two.
And they're such a huge company with so many different facets of their business. Recently this week, I saw an article or there was discussion or someone was making the argument that Apple should buy Disney. And I don't think the government would ever let that fly.
I mean, Apple and Disney are very much isn't Pixar a collaboration between those two companies?
I believe at some point it started that way. Yeah.
Yeah, it might be its own company now. I think that, they're both delving into, with Disney Plus and Apple Plus, they're delving into that whole intermediate. I think it might raise some eyebrows for trust busters, but I mean, it seems like it would be a cool match made if, you think about the strategic alliance from a business perspective.
And it seems like investors are liking the change at the top, and it's surprising that one man at such a large company can have such an impact. But I guess we'll see. He did help Disney, come into the place that it is now. So they are putting their trust back in good old Bob. So moving on to our next ticker symbol in the speed round. This is Junie from Singapore, and she's interested in, I'm not sure if I can pronounce this right, Pinduo Duo.
This is a new one to me.
PDD. They seem from the headline, they are the third largest e-commerce site in China.
So they're like a Shopify or something like that,
or like an Amazon or AliExpress, something like
AliExpress. Alibaba, speaking of China stock, really got hammered in the last couple of days, all due to China's COVID. So COVID is spreading through Beijing. China has taken a different stance than we have here in the States. Here in the States, it's like get vaccinated, get sick, get immunity. That's just the way of life. Whereas China is still trying to stick to that zero COVID policy. And so when they have breakouts like that, they shut everything down. And so, China's globalization, whether you like it or not, China's a big player in globalization. And so when they shut down, it affects everything across the board. So Pinduoduo, Again, I'm new to this, and that's probably why I wanted to feature it. Looking back 2 years, around the beginning of last year, of this year, I already think that 2022 is over. The beginning of this year, they started to go sideways, maybe have a little bit of an uptrend. Whenever I see a little bit of an uptrend, I kind of want to think about purchasing my initial covering position such that it'll take advantage of that long-term uptrend in the future. So what does that mean? We talked about it a little bit earlier. The initial covering position when you're at a top would be either shorted stock or deep in the money, far out in time, back month put options. The initial covering position when you're at a bottom would either be buying the stock or buying deep in the money, far out in time call options. So the deep in the money, far out in time call options or the stock is what would appreciate if this was slowly rising in price. So I almost feel like I want to, since I don't know anything about this stock, paper trade this stock. I might do some back testing and then hybrid that trade into some paper trading. This down move that's about to happen. And then when I bottom out, I may want to go ahead and get an initial covering position, either buy some of that stock or buy some deep in the money, far out in time, back month call options, and then start my income trading that way. That's kind of my thoughts on Pinduoduo. I don't know much about this company, so I'd have to do some research. I do see that they tend to do really well with their earnings, which means they're
Well,
not
I was just gonna say, like, fundamentally, quarter over quarter, their sales have increased 32%. Year over year, their sales have increased 57% to
yeah.
like 31 billion quarter over quarter. So they definitely are getting the e-commerce traffic.
Yeah. It's insane to think that China's not a huge, there is some people still view them as they were, especially people my age or older, 50s, 60s, 70s, still think of China as some back country place. It's not. China is far advanced. In the last 20 years, they've become, first world for sure. And so they've got the same stuff we've got here, and they've got way more people in their country that can be customers. And so, yeah, I like it. I like it from first glance. I say we do a little bit more research. And my favorite type of research, Sip, is to actually go in there and paper trade something. You can't do better than learning how to trade something by actually trading it on paper and seeing how it plays out. Back testing doesn't do that because you have hindsight, which is 2020. It's all about paper trading, forward testing to find out really how something's going to work for you. So this one and that other one we did, the BEKE, would be perfect paper trading candidates.
All right. Thank you very much for that, Junie. I'm going to
Thanks,
keep an eye on
Junie.
that one. Fundamentally, I'm liking a lot of the stuff here. So I like it. All right. Well, our Black Friday episode is approaching an end here. The markets are going to be closing. Nothing too exciting in the news. I think
No.
everybody's going out and getting their shopping started. There's not much to trade today, right? So really, you're just trying to set yourself up for next week. So with that being said, AJ, what is are we looking at the VIX right here?
I'm looking at the VIX and I'm looking at how confident people are getting. We have not really dipped down below this average line in a while. And when we did, we just touched it. People are getting very confident, which means there's not as big a market for options as hedges. This is always the time where you want to be prepared for something to happen, right? The quiet before the storm. And so I'm going to be watching this VIX for some sort of hint at a bottom in this confident period, because I have a feeling we're getting calm just before something's going to happen. I'm forecasting something's going to happen February. Mark my words. February, maybe end of January, something's going to happen that's going to surprise investors. But in the meantime, let's take advantage of this calm. And what better way to take advantage of this calm but keep finding those opportunities for selling option premium?
Yeah. And next week, it looks like we've got
Employment
Facebook,
numbers.
core PCE with the
Oh, that's a
inflation
big one.
numbers and employment numbers. So it'll probably be quiet until some of these stats come out that, hopefully hopefully will be in line with what we've been seeing, but you never know. Things could be starting to catch up.
I'm gonna stick by my pullback to about somewhere between 3840 and 3900, and then after the Fed release, I think we're gonna head higher than about 4100. So let's see what happens and see if I'm right.
All right. Also, personally, I'm going to be catching the World Cup, right? We got a lot of World Cup action. That's exciting. It's exciting.
And you're doing it from the comfort of your own home, so you can have a beer, a real beer.
Comfort of, the United States of America, where beer is pretty much accepted everywhere.
In fact, I think it's part of the ecosystem in many places.
And today is a big one. Today is the U.S. and England, right? So that's going to take us back to, our beef of 1776, right? We're really going back there. So I'm excited to enjoy the rest of the holiday week, spend some time with the family, and, get ready for an exciting week next week. AJ,
That's
how about
right.
you?
I think my wife has me scheduled to be watching The Crown.
Oh.
So I think we're going to be catching up and finishing this latest season of The Crown. She likes that stuff, and I find it interesting. I lived through a lot of that part, so it's interesting to see their interpretation of what I was there. And I think I'm not sure if 12 episodes was the end of the Star Wars Andor series, but man, that has been capturing my attention for the last weeks. So if that's the end of that, I have one episode left. I don't know. We'll see.
And is that a Disney Plus series?
It is. Disney Plus is
I'm gonna have
all
to put
about
that one on my list. I started The Crown. It's good. You're gonna like it.
Okay. Yeah.
All right. Once again, if anybody's interested in checking out AJ, checking out Training Trainer, and learning more about how to get involved, the links are in the chat. Just head on over there, sign up. Someone will reach out to you. You'll get an email with instructions. If you have any questions, drop it in the chat. Send us a DM. If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. And with that, everyone, hope you enjoy your Black Friday, your holiday weekend, and we'll catch everybody next week.
Take care, everyone.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.